Everybody, morning. Here we go. And we've got lots of people in the chat already. Channel members Don, Frank, Rob, Jerry, Hugh, Will, Darren, Arturo, Ivan, Craig, Scott, Diane, Donald, Cliff, Diane, Ted, Gary, Al. Good to see everybody. And welcome to the show. What sectors were hot? What had the best returns? Well, let's take a look, see what we got here. Year to date, asset returns, kind of the return per volatility ratio, kind of. So total return, checking it out. Gold, 27% total return. The MSCI DM, excluding the US, 18% up. Emerging markets, 16%, been pretty hot. Bitcoin, 15%. Industrials, 11%. Comm services, kind of like telecom, communication stuff, 9%. Utilities, 9%. Flight to safety, maybe a little bit. Financials, 8%. NASDAQ, 7%. And we look down here, S&P, down here at 5%. So S&P's definitely been underperforming. Of course, we had the big 20% correction, and we brought it back to 5% by the end of the first half. Heck of a round trip, I guess you might say. We've had information technology, 7%, materials, 6%, Russell 1000, 5%, consumer staples, 5%, Russell 1000 growth, 5%. So, this one's slightly above the S&P, this one's slightly below the S&P. 10-year treasury, 5%, high yield credit, 4%, IG credit, 4%, equal weight S&P 500, 4%, energy, only 2%. That's what I've been talking about. Like, everybody's been, I saw a lot of hype on energy stuff. It's been kind of underperforming when you look at it right here. Only up 2%, big picture over the year. Now, there's been some poppers and some droppers in energy. There's been some stuff that's absolutely crushed it, especially in the nuclear sector. But overall, energy, only 2%. Real estate, only 2%. Healthcare, actually negative. A lot of that United Healthcare dragging it down. Russell 2000, seeing that actually down 2% overall, in contrast to Russell 1000 being up right there. Crude oil, down 2%. And that's using the S&P 500 GSCI index. Consumer discretionaries, down 5%. Ugh. If you jumped into that stuff, it kind of got hit with the tariff news, I guess. And then dollar, down 8%. And I don't know why everybody's ramping up the rhetoric about the dollar being down giant. I mean, that really just ramps up international trade for the U.S. It's like Trump said, when Trump, we were discussing this yesterday on that profit panel show I was on, that they were asking me my opinion on it, and Trump's kind of right in this respect, where when we have a cheaper dollar compared to other global currencies, people are able to buy our stuff. Now, the downside is everybody else's stuff, since we import a lot of stuff, especially from China, everybody else's stuff is more expensive for us, the U.S. consumer. So they want more of our dollars for for those products, and then when we sell things to other people, they can get more of our stuff for less dollars. Makes it cheaper for them. So I don't know. It's a weird dichotomy, but typically when we've seen a weak start, we usually get some expansion in the markets. Now, taking a look at gold, since gold tops the chart here, how do we expect this to keep performing the rest of the year? Since this was a banger for gold, the first start, can we really expect it to keep going, or was this kind of it, right? So let's take a look at pullbacks in the market here. S&P drawdowns and gold returns right here. So this is what we've got here. We've got the start of the Gulf War. S&P 500 was down 19%. Gold returned 6.8. This flight to safety protection, like, it's not really a protection, right? So when you look at a drawdown like 19%, you would expect the safety asset to return at least as good, if not more, but only being a positive return, not so awesome. And then Asian currency crisis down 10%, down 6%. So that didn't help at all. Russian currency crisis down 19%, down 6.4%. So currency crises maybe not the best protection on with gold. And then inflation rising rates fears saw down 11%, up 24. That was an outlier. That one actually worked right there. And then tech bubble burst in 2000, down 49%. Gold rallied 12.4%. The global great financial crisis, global financial, GFC, down basically 57%. I've talked about that, how the current chart pattern looks very similar to that one right there. Gold actually went up about 24%. We're seeing China growth concerns down 14%. Gold up 3%. Tariff escalation in 2018 down 19%. Gold up 5%. COVID-19 saw down 33%, and gold down with it. Now, there's kind of a, when we get these flash crashes, a lot of times, especially if it catches traders and highly leveraged traders by surprise, they have to liquidate gold with other things to be able to cover the margin costs. They get margin calls. They have to liquidate those margin positions, and they usually have to liquidate gold to cover. And we usually see gold initially react down, especially in one of these big flash crashes. COVID happened so fast that gold never had the chance to act as a hedge in that situation. And post-pandemic policy tightening, we saw a 24% correction in there in 2022, and gold actually went down. And that basically was a systemic bring down almost of a lot of assets, repricing. So we saw everything kind of take a step back in 2022. Then the higher for longer rate expectations, we saw a 10% correction there in 23, and gold came up 2%. And then Sell America trade, this was just what we had. Basically, the tariff freakout, we saw like an 18% correction. Gold performed about 1.7 during that period, but gold's total return this year, 27%. So just during the freakout, gold just barely squeaking higher. So it got caught a little bit in the flush out. So gold acting as a hedge. I don't know what's likely to perform the rest of the year. I think right here in the middle is probably what we have. And Bitcoin maybe a good performer for the rest of the year. We'll have to see. So right here probably are most likely to perform the rest of the year, possibly down to materials. These ones that have been sucking, probably going to continue to suck this year. It's just usually the way it goes. Stuff that starts out the year sucking tends to keep sucking. And yeah, so you got to be careful out there. And that's the way it goes. So, all right. So if you haven't been playing these, well, maybe you ought to consider some sector rotation in your own portfolio here. These not likely to perform the rest of the year, just not. Things that start out the year sucking tend to suck the whole year. And then at the end of the year, kind of wipe the slate clean, and then new leaders emerge. Usually the stuff that sucked in 25 won't suck in 26. The leaders in 25 won't be the leaders in 26, except in rare cases. That's just kind of the way this whole thing goes. So there you go. Hopefully you enjoyed this kind of dive through it. As far as what are industrials, what are comm services, you can Google those. Like we could spend all day going through the list of what is included in each of these. But there you go. General, we know about some of the stories here, like United Healthcare dragging the whole healthcare sector down. And, the rhetoric about the FBI just uncovered, $15 billion in fraud. in Medicaid, Medicare, Medicaid, $15 billion. And people are going to jail. So if you haven't seen that story, you gotta look at it. It's uncovered by Doge, a giant scheme to defraud the government, and they're putting people in jail over it. And healthcare workers are actually going to jail. They were complacent in the scheme. So it's kind of one of those wild. I mean, I haven't done a story on it because it's still like there's still can't pull up enough information about it yet to really outline the whole what the scheme is, how it was working. Details are still kind of thin and not exactly verifiable in the way I want to. And so UNH, that kind of drug healthcare down. Right? That big oopsie. We had an epic short that we took right there for some of us. Booked it out way early when we got down here. Could have really cashed out on that one. Now, is this the bottom? Quite possibly. This could come back, but I don't expect it to be a leader. We've got a long way to go back to the top out here. And I know UNH is not the only game in town, but when we look at Cigna, not exactly being a banger this year. Humana also kind of sucking it up here, haunting the bottom. And then other healthcare related stuff. Elevance. Yeah. Just not seeing big performance in this managed healthcare. Now, big picture, as we get more and more retirees, there's 50,000 boomers retiring per day for the next 10 years or something like that. There'll be more and more, healthcare will be a potential up and coming sector, but this year, probably not going to be the year for this to outperform. Now, looking at stuff like, industrials, we've seen money flying into that, but that's it's kind of like since it's been the big performer, is it going to continue? And, hold on one second. I was trying to type this in another window so it doesn't show my personal information. And so XLI is the industrials right here. You look at what their holdings are. When you look at the Spider Industrials sector, so we can actually type in XLI. This is not one I follow or trade, but you can see right here, like, look at where 25 started right here. That's the big performance in industrials right there. That was that big performance. And this got absolutely crushed during the tariff talk, but it ripped right back. And now we're coming up into the target zone right around 150 right there. This is not something I've been trading, not something I've even really paid attention to at all. Funny enough, Humana, Elevance, funny enough, all these healthcares are actually on the decliners list today. Funny enough. Sometimes it's coincidental. So we look at more about this fund, click the button in Trading View. But what are they holding? Well, here you go. GE Aerospace. These are the industrials that have been performing. Uber, Raytheon, Caterpillar, Boeing, Honeywell, Union Pacific, Eaton, GE Vernova. That one's definitely been performing. Deere, ADP, Lockheed Martin, Trane, air conditioners, Parker Hannifin. I'm not even sure what that company is off the top of my head. Not sure what this one is. TDG, Waste Management. Hey, garbage, baby. 3M, Cintas. That's uniforms. UPS, not been the greatest. Emerson, General Dynamics, Helmet, Johnson Controls, Northrop Grumman, Illinois Tool Works, CSX, Carrier Global, more air conditioners, Norfolk Southern, Axion, Quanta, FedEx. They've been kind of sucking too. Back to the saga of my story. My package went back to freaking Missouri. It was there 2 weeks ago, and it went back to Missouri. What the heck? Maybe one day they'll get my package delivered. So it's back in Kansas City, Missouri. Took the trip to Knoxville, hung out here for a week, and then went back to Missouri. Misery. Anyway, PCAR, URI, RSG, Fast. You know, some of these have been actually performing. Some of these companies have caught my attention on here. Delta, that's on my bullish list. United, that's in my bullish list. So how did I get here? Might be the question. How did I get to this list? What you do, you go bring up the ticker in TradingView. TradingView is free to use, but they have a sale going on right now. If you didn't know, 4th of July sale. Dun, 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 dun. You can upgrade for up to 80% off, I think is what they're hawking. I think the standard professional plan is like 70% off. It's like $200 for a whole year. If you want a bunch of alerts and stuff like that, want to be able to use a ton of indicators, do some automated stuff, maybe like I do. I have the professional plan, considering upgrading to an expert plan because they reduce the number of watch list alerts down to 2 on the plan I'm on. And if I upgraded, I could get up to 15 maybe. I don't know. So we'll see what happens. I'm on the fence. I've only got one system right now running with the watch list alerts. Everything else I manually applied to every chart. You look at I'm using a lot of alerts here. As you can see, price alerts, I have 158, and then actual chart alerts, 323 out of my 400 in my plan. I have 1 watch list alert active here out of my 2 available in my plan. So I have a channel in Discord that kind of outlines the differences between some of the plans. And of course, TradingView has that too. So which one do I use? I use the kind of the pro plan. It's like a mid-tier plan now. They've rejockeyed kind of some of the stuff to try to get people to upgrade more, I guess. Anyway, I digress. So you type in XLI, roll down in the panel over here where it says more about this fund. Click on that button, and then it'll probably come up on the overview. And if you click on the holdings, you can dig through, see what the holdings are. Down here, US dollars, which has not been performing at all. It's been a liability. So there you go. Dun, 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 dun. Yeah, maybe I'll go to Puerto Rico. Yeah. I hope not. I hope not. I hope the package. It's a pan. It's like a cooking pan. That's what's in the package. Like, kind of like Hexclad, but not Hexclad brand. So supposed to be delivered in 3 days. When I ordered it in, I guess I ordered it like June 3rd, and it's supposed to be here by then. They're expecting 1 to 3 day delivery. 1 to 3 day times a month or 2. I don't know. I guess we'll see what happens. Frustrated is what I am. The customer service person I talked to yesterday is like, I'm going to keep track of this one personally. I'll be contacting you back. Heard that before. We'll see if it actually happens. But I did start getting some text messages about it, so we'll see if that actually pans out. Anyway, it's not Allclad. It's a Chinese brand. Put it that way. Anyway, I was watching Future Canoe, and he had a Chinese brand Hexclad, and I was like, hey, it's a semi-walk. We had a semi-walk made by, I don't even remember what brand it was. Kimberly's not on here. We had a semi-walk that we used the crap out of so much that the non-stick coating all peeled off of it, and she was like, I love that pan. And so Future Canoe was using this pan with like a metal spoon, and he was saying how, yeah, you can use metal in it. And I was like, well, let's look up the Chinese knockoff brand he was, looking at, and it was like 5% of the cost of a Hexclad. So anyway, I digress. Didn't buy it on Amazon. So S&P, probably still climbing higher. Probably still going up here. I redid that fib line yesterday. It's actually turn my magnet on. Put it on the actual. Oh, the bottom was off the screen. There we go. That's actually snapped on. I should probably lock that one. Freaking move it. And so there we go. That's the actual S&P target right now to the upside. 63, 64, 95. Snap from that high to this low right down here. Right there. So we're like 75% likely to hit that. Now, that doesn't mean we won't do some sort of pullback. Come back down here before we ramp up. That's entirely possible. And with the way this has come up so crazy, a pullback might be what the market needs. Now, we tagged 82 with this one yesterday. Stock's above the 20-day. We ramped that right up. We got lots of participation yesterday. Money flowing into everything on the first day of the second half. S5FI also spiked above 80. S5TH did move a little bit, up 5%, but not really a big money mover right there. Not really a big money mover. Yeah. So what? Yeah. They don't use non-stick pans. Yeah, they do. They use carbon steel pans that have been seasoned, and it creates a natural non-stick coating. But they cook on them pretty much every day. My Simi Wok, we cook all sorts of stuff. It's not necessarily Chinese food. It's a Simi Wok is a flat bottom pan that has that shape, and it's like kind of like a pot, but it's like a pan. It's like a pan and a pot went together and had a weird baby. So we cook all sorts of stuff in it, and super handy. We just like that style. It's one of those, like, if you want a lid, you put a lid on. If you don't want a lid, you don't. So, I mean, I understand, but anyway, I'm not trying to be like a Chinese person. Future Canoe is not a Chinese cooking channel. It's kind of a comedy channel. It's a comedy cooking channel. Check it out if you're into that sort of thing. I find it extremely hilarious, especially when he cooks the struggle meals for viewers' struggle meals. I guess to be some gross stuff, but it's amazingly hilarious. If anybody's watched Future Canoe, let me know in the chat. I find it pretty funny. If you've like Uncle Roger, you probably Uncle Roger and him kind of like did a cross thing too. Like Future Canoe made fried rice, and then Uncle Roger tore that video apart. So Nasdaq still grinding higher, probably set to go on up here. It's not, I mean, we're getting a little pullback, kind of expected. This one may go, it may be an echo in the market. We've kind of done this a few times now. May get that same size pullback. So we could see Nasdaq pulling back to the breakouts before it goes higher right there. Russell did turn around a little bit, but it's still struggling in this red zone. When you look at the bigger pullback from this high back here to this low down here, we are still at that 618 zone and still have the downside potential. My downside protection is still staying on because this is still set up for that spicy Second move down. It just depends on, can ES and NQ rally higher? Does Bitcoin rally higher from here? That's a pretty nice recovery compared to yesterday. Oil, giving hints that it might break out higher. Push through the roadmap line right there. This thing could get pretty spicy pretty quickly. That'd be a big shocker, because I've heard a lot of mainstream financial analysts say, oil, there's no way that oil is going to spike. The economy just doesn't support it, blah, 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 blah. What if they're all wrong and we actually do go ripping off to 100? What if the ceasefire doesn't stay ceasefired? Something happens. Ship blows up in the Strait of Hormuz. So gold right here, working on this little consolidation. Next move down, probably put it around 3150 to 3200. Then we'll probably see another retrace and another drop down onto the 3000 area, possibly another consolidation and a final drop, maybe down into 29, maybe 2800. This could continue on. Like I said, the number one performer starting the year may not, may continue to be strong, but it may not. It may just kind of churn. It may not keep going up, and we may have already hit our peak for gold for this year. Now it's possible we come down here and bounce strongly, like XLI did. And it's entirely possible that we do a big correction and then go ripping back to new highs. But I would be cautious on just grinding higher on gold without the bigger correction. Don't see the base case that this just goes higher with everybody piling in. I've heard lots of rhetoric like, just buy gold, just buy gold, just buy gold. It'd be much better to buy it down here at 28 than it is to buy it up here at 33. I would be very cautious. Looking at silver, this really needs, we tagged that. We did retest the breakout. It might go on up here to the 1272. If we do that, highly likely to get the retrace down here. And gold may wait for silver to do that before we do the bigger correction there. So just keep it all in mind. Like these patterns just keep working. This would potentially be a 5 up right there. Then we'd look for a 3-wave retrace into the roadmap line. That holds. That'd be the time I'm looking to load up on silver. Sergio, if you're listening to this, that would be what I'm looking for. Back down around the 33, 34 area right now. That's probably when I'll step in with a little heavier. I still expect this to be one of the biggest performers, but this current move starting to be played out. Need the retrace, set us up for the next move on silver. And Bitcoin. Dun, 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 dun. I really should just swap this out on the... Maybe one day. So Bitcoin coming back up. Didn't make it on that breakout attempt. Coming back up after the retrace. If we break out, we may come up here, stall out on the all-time high, retest the breakout before we go shooting out. This would be, this retest over here doesn't have to happen, but if it does happen, it'd be kind of your last chance to get exposure before we go ripping out. We could be at 120 in a blink right here. Couple day candle, move something like this right over here, put us right up there. See how that's the same size? So that's what I'm kind of expecting on the next kind of move, something up into the 120 area for a long time. I don't know how many months. 6 months, 8 months, 9 months, 10 months. I don't know. I've talked about the fact if we get into this 115 to 120 area, I think that the Bitcoin miners that are holding a significant portion of Bitcoin are going to start ripping pretty good. So we'll see what happens. That's just my working theory right now. That's a drop and a retrace. Continuation lower. Be careful out there. That would be what I expect. Looking at the chart right there on Ethereum. May be able to find support at that 618 retrace. If we do, could set up the bigger, higher pop. While that low could be the low, we're going to have to break through these highs to confirm that. So right now, it's kind of a coin flip on Ethereum right now. Like, does it go up here and break out, or do we get the deeper retrace? Which one is it? Good question. Don't have an answer. Like, that's unclear. Not tradable for me right now. Not everything's always tradable. Like, a lot of people have trouble with that. I've talked about that in my Termite Trading Lab in-person meetups for the last couple of years, that yes, you can spend all your time analyzing a particular chart and try to figure out every twist and turn. Like, if you want to be stuck on trading UPS, you can sit there and try to break down every little move. But 80% of the time, somewhere around 70 to 80% of the time, a stock just consolidates and goes sideways, corrects. Any given stock, they do this consolidation crap that's not really tradable. I mean, sure, you could make trades in there, but in general, it's not really tradable. I mean, even like Apple, look at the time it spent in this bull crap consolidation right here. Extremely difficult to make directional trades in something like that. Extremely difficult. And you could sell puts and, sell calls if you got put and, continue doing that. You could. But it's not really making you substantial big move money on a trend. So stocks only spend 20 to 30% of their time trending. A lot of time spent consolidating, retracing, retesting, backfilling. So I like to go focus on the 20, the stocks that are in there 20 or 30% trending, that present opportunities, like Rocket Lab. DJT looks like it's potentially done consolidating here. Might be setting up for another trend type move. DAL spent a lot of time consolidating here, doing a little more consolidation for a next potential breakout. So that's why the bullish list that I've been chasing is the bullish list. I think these are potentially done consolidating. So not everything's always tradable. And we're seeing this one, consolidate for a long time. And these ones that are consolidating, just pass. All right, like Ethereum, no great opportunity. So I just pass. Like that, just come back to it later when it has opportunity. Dollar, that put in a hammer yesterday, like a little tail right down to that 1618. That was potentially the bottom. Have to watch this. If we break back through the 99 area, probably going to come back up to the daily roadmap line, which is hanging out up here at 101 area right now. So these all worked. We hit these targets finally in full. Wow. That's been my target since back here in 23. Jeez. Can't believe we finally hit that 97 target. Holy. So that was my downside target. And if we hold that, this is the next potential upside. Now, that doesn't fit with everybody's narrative. Trump's narrative, weak dollar. That's a strong dollar. That's a really strong dollar. It's a potential wrecking global trade strong dollar. Haven't had that since back in the 80s. But look, it's kind of, think about this. We had big inflation back here, drove the dollar lower, and then coming out of that, Same kind of macro environment here. Might see that dollar. While this didn't push down into lows, you know, we had that back here. This push down may drive this right in here for the dollar. We're still seeing this potential upside into the $1.30 area on the Euro USD. So is the downside finished? If we stall right here where we are, that did hit the corrective target right there. If that is it, this thing will probably plummet into the abyss here. Because that's a three-wave structure up and stopping right there at the $1.18 zone would be bearish for continuation down here, pushing it down. The lowest low we've ever seen on the euro. That'd be a weak euro right there. Could be very interesting. Look at the Mag 7s, Apple. Probably going to go up here, 226. Finally participating a little bit. Amazon, not really doing much. Still stuck in this consolidation zone. If we could break out, probably above 230. We're looking for 254 on the upside. Google, still stuck in this consolidation. We had the first move down, potential for a second move down correction. Somewhere down in the 120s. Meta, rejecting that breakout right there. Be very careful. Talked about the fact that this, even though it made a higher high, doesn't negate getting the reflective move down, back to the lows. If you got long down here when I said that this was good for a double, you might consider where your eject point is, book that profit, potential to reload back up on the bigger drop if it develops. Microsoft got pretty darn close like that. On the non-log scale, pretty much hit the 1272. Log mode came up a little shy. Still have room up to the 508. And this may ride with Apple. If Apple goes on a rally, we may see Microsoft rally on up. Nvidia, still shy of the 164 target up there. Tesla. Those car delivery numbers probably going to come out. I didn't look if they came out already. Car delivery numbers probably going to come out after the market closed today. Might result in a drop down in this zone right here. Finish this baby up. That would be normal and expected. Somewhere down in this 265, 270 area. Lots of rhetoric about the weakness, but that could also lead to a pop. I did sell a 350 upside call yesterday against my shares. Out for next week. Reddit. Let's see what Reddit's up to. Oh yeah, here we go. We have this little consolidation we got to get through. Get through that. Reddit set for another run higher. 269. I quit selling puts on it when we got into this zone right here. So I did expect a pullback. But pushing on through. They can do anything they want to. Sets up the potential upside to 269 there. All right. Stuff is moving today. Ridiculous. Look at that. Ridiculous. Not touching that. Precious metals. MSTR. Be careful. Has a potential pattern to come down here. I went through this last night during 30 Minutes of Awesome. Michael, I know you have a lot of interest in this chart. If you missed that last night, you may want to go check that out. That is a proportional corrective move. That'd be the trend down, reflective move, somewhere in that zone. Has the potential for a correction there. I am long MSTX, so I'm bullish, but looks like we might get a correction there. GBX. Man, I don't know about that chart. Not very keen on it. Under resistance, if we can get above it, we could go higher. 777 DAIC. We have like 46 tickers that are set up with setups active for today, so I'm gonna try to skip through these. That's a SPAC. Doing SPAC things. Bitmine Immersion Technology. And it's been on here a couple days. It's probably gonna go back to the bottom. We're seeing CoreWeave putting in an offer for Core Scientific, but this may have topped out. We may see that bigger retrace on CoreWeave. Core Scientific still set to pop on out. May get up to the 21 area right here. The buyout offer from CoreWeave has not been disclosed and not been accepted. So CoreWeave did offer to buy Core Scientific. They had offered to buy them back here at $5. Back when they were trading over here, they offered like $5 and it hopped up. And then it's went on a big run and then back to the now offer to buy out again, but that would be the area somewhere around 21, 22 would be what I expect. NAM, golly, look at these nasty charts right there. Wouldn't touch that. Instill Biotech, wouldn't touch it. PPLT, still got that 160 target up here. Roast. What do folks use to play the UUP? That's how you play the dollar. There you go. Yeah, minus 13%. Yeah. Did they actually put out the delivery numbers? Tesla. Yeah. Better than expected. Better than feared. 3,065 deliveries. Final tally 384,000. A little better than the nasty number they thought. Not bad. Says up $3. And it's still likely to, we might see that dip right in there. Still expecting that downside right there. News doesn't matter. It just, that was a catalyst potential. News never matters. That's the hardest thing for a lot of people, is that the news doesn't matter. It's kind of like, whose line is it anyway? The numbers don't matter. It's all made up. You just watch the charts, tells you where we're going. BitX suggests that we might see this pop on Bitcoin somewhere in this 83 zone would be what I expect. Mogo. I would not touch this. I wouldn't touch this with your money. I wouldn't touch it with my money. Not touching it. MOH pushing lower. Decliners, Elevance pushing lower. Ooh, getting the target there. ASML potentially going higher after some retrace action here. CNC bottoming out there, 35. NOC chopping around a little bit. Sideways. Adobe probably going lower. Looking for this bottom around 310. 320, 310, 320. UNH. And we still have this target down here, but this could be the bottom. Like that could be bottom in place. This is not bullish price action. If we were to go pop back up in here, get something bullish going, retest 440, hold above, I'd be more bullish on UNH, but right now, not so sure that we don't have one more low to go. SAP is the German version. Let's look at the US listed version. Probably going to get a retrace back to the roadmap line. BGLC, Biotech, not touching it. Humana, still bearish. PTIR, probably going to retrace. PLTR, high likelihood that we retrace back to the roadmap line. If you're long PLTR and you don't want to write it back down, you might consider where you're booking profits. This can go pretty fast on a market pullback. Circle. Bubble might be done. Hype might be over. Watch for that hype bubble to come back to 100. AVAV might come back to the roadmap line. That's what I would expect. NGG might come back to the roadmap line. Hooks is Robinhood. 2x leverage. We did poke out. 109 still possible on the upside, and a return to the roadmap line back to 50. Just be careful. We can hit that and do a deep retrace. Maybe like, well, I don't believe that. Look at PLTR. Like it hit those upside extreme targets, then ramped back down to the roadmap line. Right there. Nice deep retrace, then another extension. That's just the trend, pullback, continuation, pullback, continuation, pullback, continuation that we normally see in the market. That's the pattern I like to trade. So, Flutter Entertainment. Bigger swing, high, low. Looks like it's set to go up to 318. Oscar. Chopping sideways. Might break down, go lower. Robin. 2x leverage on Hood, just like Hooks. NVDU, 2x leverage on NVIDIA. Now notice, NVIDIA is up at all-time highs, but NVDU, the 2x leverage is not. This thing banging out up here, while NVDU hanging out down here. Pullbacks can be detrimental on some of these big high flyers. So be careful out there. And where were we? NVIDIA, Crocs. I'm bullish on this, actually. Despite being on the losers list today. We break through. I would consider selling puts at 97 if you were interested in this. This seems to be a pretty firm bottom. That was the target on the downside. Then we'd be set for breakouts. That bigger move down, bottomed out right there. Resistance right there at the bottom of that consolidation. We do have that gap down right there. We'll have to contend with this gap down. Could cause some negative reaction similar to what we had. You know, this was the first attempt at the gap. Negative reaction. Could get further up into the gap. Still get a negative reaction before we push on through. ARM. And watch for that to return to the roadmap line. BABA. Still bearish on this one. Expecting this to crush on through right there. Another 2x leverage on Robinhood. Relics probably come back to the roadmap line. So setups today, things that are potentially good to enter, and that is not going to be one of them. Allegiant. There's one with an entry. Bank of California. Looking for a 14.94 target. Low price, be careful. BBWI. Bath and Body Works. Don't like the downtrending roadmap line, but 36.27 might be in the cards. BHP. $33.30 upside target. BOH. Bank of Hawaii. Lots of banks. $72. I guess banks were big winners yesterday. BRKL. Another bank. Same pattern over and over here. 1140 cash This one probably really bullish, actually. If you're going to play one, this was probably one of the ones to consider playing. 8750. CBRL or CBU. There's no R. CBU. Quit saying R. Probably good for 61. CCI. I don't like that. That's a watermelon seed squeeze. 111.90. Charter Communications. Look at that beautiful tag, beautiful retrace. That is, look at that, smoking hot win rate, smoking hot profit factor. Despite having 11 trades in the history, this looks like it could be a winner. Winner chicken dinner, 446 on the upside right there. CNOB, Connect One Bank. And remember, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, like I just talked about, options, bonds, forex, futures, cryptos, treasuries. Don't trade them. If you need somebody to tell you what to do, hire and consult a financial advisor. That probably good for 26. CSL. It's probably not the right CSL. There we go. There's the right CSL. Here's the high. Here's the low. 419. Oh, baby. Look at this one. 39. Check plus. 84. Check plus. To almost 3. Check plus plus. I might buy a few shares of that. Target 419. Could last, 99% of the time. This should last less than 6 months, 220 calendar days, 99%. But, average is 45 days for these. So that's 45 trading days. Standard deviation is 35, though. So just 68% of the time, it could last 80 trading days. CTSH. $83.50. Yeah, Skags, if you're on here, that CSL. That is a split. Messed with it. I don't like these ones that have splits in them. That's just, it's a weird regular split. There's extra share. Peeling off 1%. 65.53 upside. CZNC. $20. FBK. Lots of these little bitty moves in here. Looking for 48. FSBC. Looking for 30.96. GPC. Yeah, 130. That one might be okay. Like, it's running a bit better than the standard. It's like this number is good. 48. That's significantly significant. 77. That's better than the average. And 1.4. Better than the average. It's not a check plus, but it is a check. That one, another good one right there. GRC. And we got the high, we got the low. 39.97 on the target. Another one, 40, 80, 1.6. So there's a check plus. Look for 80. Check plus for me. 1.6, just a check. So I like check plus, check plus, check plus, or plus plus. So that one right there, likely to work out. 39.97. Another nice one. Home Depot. Another nice potential. This has a measured bounce and an activation point, so this actually could outperform up here to 412 to 430. Could. Doesn't have to. Here's the high, here's the low. Activation point. So the conservative target, 394, right there. Right there. 38. Check plus. 71. That's below. That's below the standard right there. Below. And then 1.2 is just the standard. So just an average potential. Not like a ooh baby, but the measured balance does add a little bit of extra, and it's on my bullish list. Home Depot and Lowe's both on my bullish list. So HIFS, that has a very similar pattern to Home Depot right there. 282, just running normal. We're actually starting to get some good ones in here. Market's starting to move a little bit. Hopefully it's not just a fake out breakout here on the S&P. 30, 43. I mean, we did make a higher high, but can easily just turn into a fake out and we get a big correction. Stop a bunch of these out. It's not what I want to see, but it is always possible. 71.80, upside target. KTB is not the right one for some reason. I don't know why. It pulls up the wrong ones. And 77 on the upside. LII. Here's the high. Here's the low. 616. 2277.9. Net loser. Be careful on that one. MCBS. These are all potential trades right here. All of them. Like, just because the statistics don't look awesome doesn't negate any of these from working out. They all have the same probability over the long run. These ones that don't have statistically significant populations, you just fall back on the normal, like 74% and 1.2 on the profit factor. NECB. Probably gonna pop up to 25. ONB. No, lots of banks on the list today. Here's the high. Here's the low. 23 on the upside. PB. Here's the high. Here's the low. 75.90 on the upside. PCOR. Here's the high. Here's the low. Remove that bigger 74.30. PFC, or no, PFG, Principal Financial Group, another bank. And 83.50. PGC. That high, this low. 30.44. PRKS. I have a feeling I just sold some calls on Rocket Lab. 54.57. SAIC. Somebody was asking me about this a lot a few months ago. This one finally might be done correcting. Here's the high, here's the low. For those of you who hadn't heard the story, the engineering company my family runs is a spinoff of SAIC. My dad worked for them briefly back in the 80s. Spun the company off, took the mining business in Tennessee and created our company. So I know a little bit about coal mining and in Tennessee anyway, a little bit Kentucky, and that business kind of wound down and we got into doing other engineering projects. You know, we worked for Pilot Travel Centers for a long time, did 135 travel centers all over the country, and all sorts of things I've learned over the years. So SAIC right there, 128. Not great here, not great here, not just average. So SPH. Here's the high, here's the low. Looking for 101, not 101, 10. Looking for 10. Low price stuff, be careful, but look at these numbers. 43. Check. 90. Check plus. 1.7. Just a check. That one. might work out. 1076. Wouldn't take a lot of money to play that either. It's not a huge upside, but that's like almost, what, 8% upside? $9 upside? Not bad. Not bad. Let's see. Schwab. I don't know. Sherwin-Williams. Excuse me. Sherwin-Williams. As the... Man, look at that resistance right there. I'm not sure I'd want to mess with this. 371. If we can break through, and then it could kick off the bigger move. 41. 82. That's check pluses all the way across, so that might actually work out pretty good. That's another pretty interesting one. That actually has a potential measured bounce too. That might actually be juicy, juicy right there. Yeah, that would set that up to 414 potential if the measured bounce plays out. That could be pretty spicy right there. Won't necessarily go quick, but that interesting one. I never know what I'm going to find when I'm, this one, don't like it. Don't like it at all. 1350 on the target. Temp. Tompkins Financial. Here's the high. Here's the low. 67 target. 31, 64. Negative. Negative. T-Mobile. If we can actually break out of this downtrend, this thing could outperform to the upside. 286. Just a little measured or roadmap bounce sets the target at 251. And we may see that push out to that 251, retrace back to the trend line, and then go rocket ship style. UHS. Got this high, we got this low. My voice is starting to crack. Golly, excuse me. 204. Verizon. Already kicked off back here. And then retraced. God, that's been a choppy, hot mess. Look at the high, look at the low. Kicked off right there, 44.96. And then the bigger swing with a bigger target up here, about 48. WABC. Here's the high, here's the low. Looking for that to rally up to 52.40. WAT. 371. Williams-Sonoma. So we got the bigger move and rejection of the 618, but this swing, 183. Push that up in here, and then that would activate the bigger potential upside. 22 trades, 90 and 4.4. I mean, look at this. This is not statistically significant, but 90, that's a check plus plus. And 4.4 is a check plus plus plus. That one looks pretty spicy. I like that potential. Like that potential. Yum C, Yum China. I don't like that choppiness right there. That high, that low. Kicking it off, 49.10. Upside potential there. And that's the list. Buys for the day for those of you still left hanging out with me. Guess some people didn't want to hang out for the banger potentials like Williams-Sonoma. Still looking for this grind higher. This, we may be in like a climb like this. And it could be, probably actually more like that to get there. That's what I expect for now. Until something else shows up in the chart. We may hit our head anywhere in here, take a bigger spill, and set up a bigger potential ramp. So, all right, everybody. I'll be back again tomorrow. Same bat time, same bat channel. 9:15 tomorrow morning. We'll hunt for everything again. Remember, tomorrow is an early close, and Friday is market closed. So if you got options plays this week, be careful. 1 o'clock close. Have a great day, everybody. We'll see you.